Hey guys, it's Steve here. It's about 10:30 on Sunday morning. I just wanted to go through our positions real quick with you. We put a poll out on the blog to figure out exactly what everybody was looking to have. Looked like a video format position review was requested, and then a written format for the watch list stocks were also as a combination would be included. Um, as you know, right now, if you've been following me, we have 12 positions in the portfolio right now. Basically makes up 96%. So it's a factor of math because we only put 8% max in each position. So we can only actually accommodate 12 positions at this point, depending on the overall makeup of the portfolio. There could be more depending on how some are structured as far as max risk, but at this point we have 12. Um, right now, there's approximately $685 in profit after commissions in the portfolio, which we started, I guess, 2 weeks ago. Um, so, like I said, we'll go through each position real quick, just kind of give you a quick little synopsis, determine if we have to move any stops, and then go from there. All right, let's get to it. All right, so the first position here we're going to look at is Cardinal Health. Basically entered here on I believe it was the 14th that we entered at 69.50. Our stop right now is 65.20. At this point, there's really not much to do with this. And to be honest, that's going to be what we discuss with a lot of these. As trend followers, there's really not a lot to do between entering and exiting. We just kind of get on and enjoy the ride. So that's what we're going to start out with this one. It's basically pulling down that in some little bit of consolidation here after this move higher. But as I said, here's the 20-day moving average, the 50-day moving average, previous support, and we can go ahead and probably draw a trend line just from the looks of it across here. My computer wants to work, and there's your trend line support. So like I said, there's really not much to do on this one. Next one is Dunkin' Donuts. As you can see, it consolidated for a longer time here across this, basically from October to really the middle of February. Broke out. Again, we entered at 50.24. Stop right now is around 49 or 45.93, and it's moving well. So this one is much more difficult to obviously draw a trend line, but again, we have the 20-day moving average, the 50-day moving average, and previous support. So there's a lot of things that have to actually happen for us to get stopped out of this position at this point. All right, the next one here is Harris, HRS. Again, consolidating after the breakout, which is always a good sign, letting it, the moving averages kind of catch up. The Friday, or actually Thursday, was on high volume, as you can see right in here. Same as the high volume breakout that we had. So I'd be okay with this one actually moving sideways for a little bit longer. There's really no rush. To be honest, if it extends higher, I'm going to feel it's a little extended, but I really don't care. Like we said, we just want the stock to do what it does, and we stay with it as long as we can. So, this was the consolidation that kind of prompted it to be added to our watch list. We had the breakout on this day here, and we entered on the 15th. So again, not much to do here. 20-day, 50-day previous support, and again, we could probably draw a trend line right across all of it to really, so you could see the 50-day moving average is really our trend line. So again, just stay with it. Nothing really to do. Southwest Air. Here we same, as I said, this video could get repetitive only for the reason that there's really not a lot to do. We had some consolidation here. It's also consolidating past 4 days here. We entered at 22.25. Our stop is 20.43. Looks like we have a dividend scheduled to be paid out on the 4th. Yeah, so we'll on the 4th is the dividend, and so we'll collect that soon. And that's something else that I'm really not keeping track of, but is kind of an added bonus, is every stock that we are in does provide a dividend yield. So you know, the longer we wait and the longer we're in a stock, the more we're going to get paid just from the dividend. Microsoft is the next one. Microsoft is a sloppy pattern. I'll be perfectly honest with you. Not the kind of pattern that you know is very easy to trade, only for the stops and starts and ups and downs. But it looks like we're finally actually starting to make a little bit of advance here. It broke out the other day. The entry, you know, that day, like as I said, I think in the portfolio update wasn't exactly what I really would have liked to see towards the end of the day with the larger candle sell off here. But an entry is an entry. It still happened to close above all the consolidation. It pulled back the next 3 days, and then we started to get some higher volume. As you can see at the bottom here, there is higher volume on these last two bars, or at least average volume compared to the last few weeks. Um, so with Friday's close, you know, I feel much more confident with it. Stop is still going to say 35.81, but you know, if this can keep advancing and running, we could potentially move our stop up, you know, in the next week or so, up to this 37.46 level. Northrop Grumman, again, you know, with the sell-off in the market that it had a couple weeks ago, this pulled back, really established some high quality support here, and almost a V-shaped recovery where it went back and now is consolidating at the top of this breakout. I'd really like to see it move back above this 122.24 to really signify that you know this thing is getting ready to run. And again, you know, our stop right now 110.77, but just looking at it, we can go ahead and draw a support line as well. So again, 20-day moving average has to break, the 50-day moving average has to break, the trend line has to break, and previous support has to break. So, you know, same with Dunkin' Donuts. There's a lot that has to happen for us to go ahead and get stopped out of. And, you know, the dividend was paid, but we probably missed it by a day only for the ex-dividend. So I would have to actually check and see if we got paid that or not. PHM, Pulte Home, going ahead and really consolidating since the beginning of the year, really working off this move. And as I said, you know, we have this support area, you know, that can come, this trend line that can come through, and that's the reason that the stop really isn't here, down at this 1871 level. One is because you know that would have been more than a 10% risk on our initial entry, which, as you know, if you guys read the rules, that's something that we really don't do. And then there really was no need to have it that far down. This area here provided some consolidation, which led to the breakout. And so our stop right now, 1934. Our entry here was around 2114. You know, these are give or take a few cents too. Just you know, I'm just taking it off of the spreadsheet. But again, you know, a lot of things have to break and start to go wrong to knock us out of this one. PNR, Pentair. Since that breakout we had, you know, it really hasn't looked back. We got in at 79.03. It's currently 80.81. You know, and our stop is down at 71.69. Really, the only way that we're going to be able to go ahead and raise our stop is either if this keeps running, where we can basically put our stop right here at the 77.89 level, which would have been this pullback support and the previous resistance. But in order for that to happen, this 50-day moving average is going to have to be above that 77.98 level. Only for the reason that if we put our stop here, it could technically go back, touch the 50-day, and rally, which, you know, I've been in before, and it's not fun to watch. So we'll leave our stop fairly wide for now, and just let the thing work. PPG broke out the other day, followed through nicely on Friday. Same thing, you know, that V-shaped recovery kind of gave you a false breakdown in this area. Like I said, if it was something that we were long, we unfortunately would have been stopped out. But the fact is we weren't long, and the V-shaped recovery, a little bit of a consolidation and a breakout, and this one is acting very strong. The volume on Friday was, you know, nice to see on a continuation move higher. So like I said, we got in at this 190, 170, which happened to be, the pullback on Thursday. Our stop right now we're using is this 180, 112. Again, we could have used 176.90, but the fact is, I really don't see it getting down there, or feel like that area doesn't need to be the one that's violated for us to be proven wrong. And that's essentially where our stops are, is where we are, we consider ourselves to be wrong. QQQ, the power shares, the for the Nasdaq. This was the first position we entered. It broke out in this area. Again, that V-shaped recovery breakout, nice bullish engulfing pattern. If you guys don't know what that means, basically the bar here engulfs the entire bar from the day before. It's a real strong sign of strength. And since that pattern, it's got actually consolidated. Um, Mouse battery is low, so that's something we have to change here. But this consolidation area right above our breakout, again, letting these moving averages catch up, letting this thing rest. It's a sign of a strong stock when this thing will move sideways as opposed to coming down and testing again. I like these patterns. I like when they consolidate. The volume on Friday was heavier, but we kind of got it in decision day. It closed right in the middle of the range. I don't really put too much into that. And again, just let it work. Tyco, TYC, went ahead and broke out, consolidated. It's kind of the same old story with a different stock. Here's your trend line. Again, 20-day, 50-day trend line, and previous support all have to be broken for us to be stopped out. I would say, that's a fairly good indication that we're wrong if all those are broken. To be honest, even if this trend line is broken, I would consider that to be, an indication that the stock is no longer working. But we have to let it break this previous support level and see where it goes. And the last one for this weekend update is WDC. This one had a pullback. It consolidated for 2 weeks, 3 weeks in this range, broke out on some good volume, and now is pulling back. Hindsight being 2020, we probably should have drawn the box like this and let this be our breakout. Above 89.18. That probably should have been what we had done, but the fact is we're in it, and our stop is fairly tight. As far as it's about $6 on an $8 stock, so we're 7.5% or so. And that's the thing with this is you don't have to be right every time. As long as when you're right, you pay for all the losers, then you're good to go. So just going over real quick the monitor tab. Here is, I don't know how many of you guys out there are use Thinkorswim or not, but just here's the quantity that we have. This green dollar sign indicates that there's a dividend either upcoming or has recently passed. Our profit and loss is here, and to be honest, I don't pay too much attention to the dollar amounts. Because I feel like the dollar amounts can kind of get you to the point where, we made $1,000, we should take some off. Fact is, that's not how it works. That's not how we trend follow. So I like to look at the percentages. 2.5 or 2.85% gain. And if you look at that, there's 1, and our losers, our biggest loser is a 1.47% loss, and that's that Western Digital. But again, I like to look at the percentages of profit and loss since we opened the trade, only because for me, it kind of keeps my emotions out of it. It keeps it systematic, and we go from there. So at this point, obviously, like I said, there's not going to be too many new stocks that are going to be added or there are not going to be any new stocks that are added until we go ahead and actually exit a position just for capital management. There's really not enough money to even put another position on, which is fine. It leaves about $4,000 in cash. which is fine. Um, some people have said, "Oh, you put the positions on fairly quickly." I agree, and I think that's more of a nature of just starting the portfolio. But the fact is, the signals were there. They met all our criteria, so there's no reason we want to skip out on one just because we're putting them on too quickly. The fact is, we put them on quickly because the market was strong. So it kind of keeps you in line with the market. And just to go over my spreadsheet that I post for you guys, that's always posted actually. We can actually go ahead and just go through the top here. Kind of gives us our winners. We have a 9 winners. Average is a 1.5% gain. 3 losers at an average of a negative 1.1% loss. Here's our breakdown as far as diversification. As you can see, technology and industrials were overweight in. Would I love to see all of these have something filled? Sure, but the fact is, energy stocks maybe aren't performing right now, and that may be the reason that we don't have anything in the portfolio for those. And then again, here's what basically these are the columns I look at as far as the portfolio, how much of the makeup of the portfolio, the profit and loss by percentage, and then as well as what the risk is. And right now, we're risking about $8,000 on the portfolio, and that's from where we are currently. So we're at like an 8.5% risk, which is fine. I don't like to go anything over 10%, not on a position, and that keeps us on not over 10% on the portfolio as well. So with that said, I hope you guys enjoyed this. It was actually kind of fun to make it. Hopefully, I can edit it as quickly as I would hope and get this out to you. Unfortunately, for now, just until I can make sure this is the way we want to do, it is going to probably have a watermark on it. I'm hoping that that's not too obtrusive, and you guys can kind of get the gist of what we're trying to do here. And if it's something that I get some positive feedback with, then I definitely have no issue purchasing the software. But for right now, if we're only going to do 2 or 3 videos, I'm not going to purchase, $100 to $200 software if it's not going to be of benefit to anybody. So with that said, guys, have a good weekend. I will post the watch list stocks later on, and any feedback would be appreciated. Thanks, guys. Take care.